Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course. And in the course, we go over two very specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks are gapping higher or lower at the open. When that happens, it creates an opportunity for traders. The opportunity is for traders that can understand how to identify a specific price level where stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn all the specifics around this strategy. Which stocks it works the best with, what are the criteria of the stocks we're looking for, what type of volume should they have, and a whole host of other items that make up the morning gap trading strategy. The second strategy are the gap fill trades. When stocks do gap higher or lower at the open, it leaves what's called an open gap. Stocks will come back to fill an open gap at some point in the future. This creates another opportunity for traders because at that gap, and depending on how they're trading into that gap, it creates another opportunity where these stocks should have a price reaction in the other direction. The other thing I do is I give traders an opportunity to get my gap trades each and every day sent to them at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the markets even open for business. Here's a copy of the exact email that went out this morning to my traders identifying the list of morning gap trades that were on the board today. Let's take a closer look. You can see where I've got 5 potential gap trades on the board today. LB, L Brands, Tesla, YUMC China, Genuine Parts, GPC, and Liberty Media C, Formula One, FWONK. Now, we're only interested in trading the stocks that come into our specific price levels. These price levels represent the highest probability trades and therefore the highest probability of success. If a stock doesn't hit its price level, it's off the board, it becomes a no trade. So this morning we had 2 stocks that came into their price level. We had 1 heartbreaker. We're going to go over that one anyway because it's interesting. And 2 that did not hit their price levels. Tesla and GPC did not hit their price levels, so therefore they're off the board, they're no trades. Let's take a look at the others. L Brands, I say gap lower, support levels are $47.98 and $47.13. I gave 1 more level, and then the stop and profit target is about 30 to 55 cents. These are minimum profit targets. YUMC China, gap lower, support levels are $36.33 and $35.12. And then I even gave a third level of $34.04. Stop and profit target is about 22 to 40 cents. Again, minimum profit targets. And then the last one we're going to look at anyway, which didn't hit its level, but it came awfully close, was Liberty Media. Support levels are $34.04, and then I gave 2 secondary levels. Stop and profit target is 20 to 40 cents. Let's go back to the charts and look in detail what we've got. As you can see, L Brands closed yesterday at $54.11. The stock was gapping significantly lower this morning, creating the exact opportunity we're looking for. The stock opened today at $49.57 and traded lower. You can see from the email, the level identified was $47.98. And by the way, any trader that's taken the course at Lazy Gap Trader is able to identify the same exact price level. Once it reached that level, you can see it made a low of $47.95, just 3 pennies below the level, and just minutes later was already at a high of $48.94 for almost a dollar bounce in just minutes. Traders got the bounce we were looking for. We're out of the trade with a profit in our pocket. We don't care what happens to the stock after that. And as you can see, it came lower. Sometimes they come in to another level that we've identified later in the session, which gives us potentially another trade. Great bounce, great profit. Quick, Painless, stress-free. Those are the ones we like. Now here's YUM China. You can see where yesterday the stock closed all the way above $40 a share, opening today just above the $36 level. Now I want to go over what happened right before the open, which will provide a good lesson for those traders playing the gaps right alongside me. I've switched over to the 24-hour time frame, which shows the pre-market activity. And you can see here where early in the morning the stock came into the 36.33 level and bounced off of it. And that's okay, because if it came back again later, we could still get the bounce we're looking for, but we like stocks to come into the level from afar. As you can see, what happened with YUM Brands or YUM China is that as we got right up to the opening bell, the stock was hovering right above the 36.33, and therefore, because it's opening right above the level, it changes the risk profile of the trade. If the stock opened at $37, $37.50, or $38, that's okay. We would have still been willing to play the 36.33 level. But the fact that it opened just pennies over the level changes the risk profile. It doesn't have the same probabilities of the trade. And I had a lot of traders asking me right before the open through email, is this trade still good? And I told them the risk profile changed. Therefore, look to the second level. And all this is in the course. Everything traders need to know about how to trade the gaps is found in the course at Lazy Gap Trader. Let's go look at the second level and see what happened. Now here on the second level, the stock even consolidated above that level, which again changes the risk profile. But what you can see here is the power of these price levels. Here you can see what happened at the second level. The stock did consolidate over that level, which is also discussed in the course, and does change the trade slightly, but what's important here is the power of these price levels. You can see what happened once the stock came into the 35.12 level, pierced through it by just a little bit, making a low just 2 pennies below that level at 35.10, and guess what? In the same candle, making a high of $35.99 for a tremendous bounce higher in just a matter of minutes. More profit in the pockets for any trader that took this trade at the second level. Folks, we do this over and over again, day in, day out. This is a strategy that you can use for the rest of your trading career. One more thing I want to look at because it proves the point of these price levels. Liberty Media, the number from the email was $34.34, and you can see here in this candle, we made a low of $34.39, just a nickel above the level, and had a tremendous bounce. Just minutes later, the stock was already at a high of $34.89. Now that happens sometimes. This is trading, it's the market, and sometimes we just don't hit the price level to the penny and they bounce away anyway. But it goes to show you the power of these price levels that you learn how to calculate for yourself in the course at lazygaptrader.com. If you want to build a strategy that you can use for the rest of your trading career each and every day with a high degree of certainty and a high degree of predictability, then come over to lazygaptrader.com, check out the course, and learn everything you need to know about trading the gaps successfully. I'm David Frost, lazygaptrader.com. Thanks for tuning in, folks.